Hello everyone, today is March 22nd and this is another market update from the Wyckoff Crypto Trading Lab. Thank you again for um, uh, all discussions that we have on the Discord. We're still working on some additional features, so we're going to definitely have some changes coming pretty soon. All right, well, with that, let's quickly look at the market. And I think, we kind of have to talk about Bitcoin a little bit more here. We don't see any continuation to the upside. And today in the tape reading lab with William, I was discussing the Bitcoin. So the way how we looked at this is that with this lower high failure, and with the area where there is somewhat of an inactivity. This is probably the lowest volume signature, just on average, or very close to that, to what we've seen maybe like before. In this whole area, the volume signature relatively stays high, and then after this bar, it's somewhat on average lower. And there is a little bit more presence of selling through this kind of like hidden supply. So what is possible here? Could we possibly have maybe a scenario that we have had here on the at the beginning, in the middle of January, where we had a change of behavior, we had a lower high attempt to rally and a failure. So a change of behavior, rally, or a change of behavior, rally. So you could look at them either way. And then because this inactivity where volume goes down, brings us to some kind of setback, some kind of reaction right here. Still within the much larger context of a much larger rally, but within the context of, let's say, this area right here, where we might just have like a one big bar like this into a high low, and then from here we're still managing to hold the support and then just kind of like go like this. So this is just a thought that I'm having currently, would it be possible here to do that? And I mean, for sure. There are a lot of mentioning about shortening of the thrust. So let's acknowledge this number one. That's number one first. Shortening of the thrust is definitely very important, but you have to contextualize it. So, just because shortening of the thrust happens doesn't mean that we are in the distributional scenario. Doesn't mean even that we're going to have a extremely significant reaction to the downside. So I hear some of the prognostications where people are saying like, oh, now because of the shortening of the thrust, Bitcoin is going to fall into the base of the support area of around 32,000. Unlikely. I think that demand from institutions is pretty well established. And as I've mentioned many times before, we're in this situation where it's not just our regular cryptocurrency traders and institutions that are involved in this market. A lot of the companies that need to have crypto assets are getting involved. They're not active traders. They just need an asset, crypto asset on their balance sheet. So, example of that was Tesla and Elon Musk just recently, buying the Bitcoin. So something like that. So I still feel that the long-term trend is still up. It's all about tactics in this area. So shortening of the thrust might suggest that demand is no longer as strong, or supply is coming in and stopping the rate of advance. But it doesn't really mean anything significant, at least at this point, in the context of the long-term trend. Unlikely that I would be thinking that we should go to like 32,000. That would be a very, very high, low probability type of scenario. I think the scenario that we could anticipate is short-term weakness, and within the structure here, within the structure of the uptrend, maybe like one bar that has this type of shakeout characteristics that we've seen before and in the same formation. And then the rest of it kind of falls into the same logic, right? So we've talked about a trading range, and I'm still kind of sticking to this idea. We are in the trading range. So what does price do in the trading range? It fluctuates, and it fluctuates up and down. So once we come to the resistance, what's going to happen? We're going to fluctuate, and we might potentially go to the lower boundary of the range, to the lower boundary of the range, to the lower boundary of the range, and so on and so forth. Also, we said that there are particular bars that are extremely important. So for instance, this bar right here, this bar right here. So those are the bars where capitulation selling and capitulation, uh, uh, buying behind the selling capitulation has happened prior. So those are very important for us to see how the price could overcome it and whether it could stay above it. So we kind of see in a lot of assets that the price has inability to stay above. Either it commits temporarily and then right away goes down, and we don't see any demand coming in with a lot of aggression. So that drifts the price down and suggests that there might be some kind of reaction a little bit to the downside. So we'll have to see, but for now, obviously, some caution is warranted. I've been taking a little bit of profits here and there on some of my positions, just to make sure that I'm securing some of the runs that happened in the last week. So short-term potential weakness, unless the demand comes in and asserts itself with more strength. So we need more demand at this point than supply, because if supply doesn't come and demand stays the same, we still have that vulnerability of the short-term scenario. All right, well, with that, guys, that's it for today, and I'll talk to you in the next video. Thank you.